It's been a bad technical market since October. It's going to continue bad through the end of the year and probably through mid-January. So all this news about China, the administration, the government shutdown, all those things just fuel the fears of an already nervous market.
So, Dory, I'm curious. We've had some, I guess the best way to put it is frustration and perhaps friction in Washington, D.C. between the White House and Congress, other parts of the administration. Why is it now that it's becoming so much more of an issue?
I don't think that it is. This happens all the time. Think about all the times in the past where Congress has gotten at odds with either each other or with the White House over the budget, and there's a threat of the shutdown and how nervous the market gets. So as an investor, you got to think, well, is this going to shut down permanently and that's the end of America? I don't think so. So it's all political posturing. It'll work out, and all it does is just create more buying opportunities for those that have cash and a little bit of nerve, if you will.
And there's no doubt about it, Dory. You bring up some excellent points. The thing in Washington that probably has more people concerned is what's happening not with the administration, but with the Federal Reserve. Take us through the thought process you have right now. Did the markets overreact to what happened with the Fed interest rate hike and subsequent press conference by Fed Chair Jay Powell?
You know, it's a really interesting time to try to get in the mind of the Fed. You know, they had a long-term position that rates were artificially low and that they needed to get them up so they could lower them again in case we had a recession. So they've been raising rates. They've been stubbornly committed to that. And that's probably okay, except they're not looking and letting the economy absorb the rate hikes, which percentage-wise are way higher than what they have ever been in the past. And they didn't listen to the market. And so here they're looking at historical data without looking at probably one of the best leading indicators that you can have, which is the stock market itself. And they should have taken the reads over the last 30 days and said, hey, let's pause, let's wait. There's no hurry. And the market would have loved the news. And instead, they had this either stubborn adherence to this policy or, at worst, a stubborn resistance to the administration.
Dory, you mentioned the stock market being the ultimate leading indicator. If that is the case, are we due for a recession in 2019?
Well, I think there's a lot of data slowing home sales, things like that. The FedEx numbers yesterday were a global leading indicator. So I think we got to listen to it, we got to look at it, and we got to be careful. But it doesn't mean that the market doesn't oversell. And we're caught in this technical cycle period as well. Add all of this to the fear and then the normal problems in politics. I think it creates some interesting buying opportunities between now and year end and probably second, third week in January before this thing starts to play out.